You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTER Schwartz from CBOE. The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again. It is Thursday. It is noon Central. It is 1 p.m. Eastern. Do you know what the heck's going on in these crazy markets we're all living through together? Well, let's find out, shall we? My name, of course, Mark Longo from the THE, OptionsInsider.com. I was just joking with someone the other day. We heard someone refer to themselves in the third person. They said, you should do that more on the show. So maybe a little experiment with throwing a little Bob Dole, a little third person act. I don't think I can get used to that though, but it would be pretty funny. I think it would throw a lot of people for a loop. But of course, if you want more content in your lives, listeners, you know where to go. TheOptionsInsider.com/pro, the place to go to learn more about everything we got cooking over here on the network. Had a great pro Q&A session just earlier this week, tackling a whole bunch of fun topics for you folks out there. Actually got into the somewhat rarefied realm of trading psychology and how to learn how to cut your losses, let your winners run. These pivotal questions that we all have as traders that we don't really get a chance to address very often. We got into it with an expert on that side. So if you haven't been to the pro, you can check out the clip. We posted the clip over there. It was a pretty fascinating We were completely oversubscribed with questions. Folks were going bonkers for this. So check out the session if you missed it, listeners. TheOptionsInsider.com/pro. We had so many, we'll have to bring him back on to tackle more questions, I think, because it's a fascinating area. Hey, we all have those issues. We all end up cutting our winners too soon, right, and let our losers run. It's just human nature. So how to deal with that and some of the surprising psychological roots of why we do that, which is fascinating stuff. Again, theoptionsinsider.com/pro, the place to go to learn more. As we go around the horn, see who's joining us today. First, let's go out all the way to the East Coast to CBOE East, where we are joined once again by the FLOWMASTER himself, Mr. Henry Schwartz, from the aforementioned CBOE. Mr. FLOWMASTER, welcome back to the show. I didn't see you at FIA this week. No FIA tour in Chicago for you this week, sir?
No, I did not make it out this year. I've gone in the past. I get some great ideas from those conferences, but I couldn't make it this time. But things in New York are great. Beautiful, kind of it still feels like spring, even though it's October. Yesterday was 80 degrees. So, and market's certainly busy. So, lots going on.
Very different visual walking into FIA this year than last year. Last year, they were hurriedly scraping FTX off the boards, right? Oh, we don't know who this firm is, let alone that they were our marquee platinum sponsor for the entire event. None of that skullduggery going on here this year, listeners, as we keep going up the coast all the way to the dark and stormy shores of Maine. You know who's hanging out there. It's the Rock Lobster, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back. I won't even ask you if you go to FIA because you never leave the cozy environs of Maine, sir. How are things on the dark and stormy shores?
Again, give me a reason to leave the cozy, dark and stormy shores of Maine one more time.
Delicious Portillo's, that's up there.
Okay. You hit me right where it hurts.
I know that's your weak spot.
Although Portillo stock is now trading $15, I think I got to buy some more.
I know. You might have to get some more. I knew that was also of interest to you. So it's a double whammy. The stock and the delicious food. I'm actually going to
get put on my 17.5 put, so I guess I'm going to automatically buy some more anyway.
You're owning some PTLO, yes.
So, but things are good. Things are, actually, they're a little dark and stormy today.
There you go. See? It lives up to the name yet again as we keep on rolling the dial counterclockwise all the way back here to the hinterlands of Chicago. We are joined once again from a place where it's never dark and stormy, always bright and cheerful. It is St. Charles, where we are joined by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to you as well, sir.
Always a pleasure to be here, especially when you say it's beautiful in St. Charles, but gotta admit it, it's a little overcast today.
Lies. Damn lies and statistics, sir, as we keep on rolling right out into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading, what is lighting up our tapes out there today and indeed this week. And coming into the start of the show today, we are seeing once again red back on the screen, coming on the heels of a day where it seemed like the market's starting to maybe find their footing a little bit. Again, it's hard to read too much into any one day's movement at this point, listeners. We know past its prologue, we're going to whipsaw all over the place these days, sometimes intra-session. And right now we are seeing the red again, up yesterday around 0.8% in the S&P, giving most of that back today right now, off almost 0.75%. We sold off down to right around 42.30, and then we kind of bounced off it back up to about 42.45 or so, and now we're coming right back down, threatening 42.30 again. So can we break that? I guess we shall see a little bit later in the show. Can we break 4,200 by the end of the week? We shall see. It does seem like right now, at least, the impetus is to the dark side. NASDAQ also off roughly 0.75%. And the Dow off a little over 0.5%. So most of the major indices, once again, firmly in the red. We were starting to see, after a bit of a pop earlier this week, hey, we were briefly flirting with the logins, listeners. We were back over a 20. And so that was kind of fun. We maybe could have a 20 again on vol views on Friday, maybe bring back a little bit of the old logins, even though I do think technically the cutoff in the past for the logins has been around the 25 level. That's the danger zone. These days, you're hanging out in the low teens. We were at a 12 not too long ago. 20 handle, that might qualify for some logins territory. But right now, we are back away from that, kicking off the show at about a 19.10, actually, up about 0.8 points. So we'll see. Not that far away from a 20 handle. So we'll see if we can have a nice 2.0 plus on the show tomorrow for vol views listeners. VVIX looking frothy again. VVIX looking like it's trying to revisit logins territory again. Back up over triple digits. 101 right now, listeners. Up 6 points. So that tells you vol is frothy. Vol is moving. So we could be back above 20 by the end of the session. We could be back down to 18, 17 range. Time will tell, listeners. VXX back up at about a 25 even, puts it up nearly 2 points, about 1 3/4 points. That's the loftiest we've been in VXX in a little bit. UVXY back up over an 18 handle, 18.20 right now, up about 1.8, almost 2 points. So market giving back some of that reverse split, helping the UVXY folks. Otherwise, they would have to, keep reverse splitting every few months out there. SVIX 25.40, so taking a rare hiatus, and SVIX back south of the 30 handle again, down about 2 1/4 points from where it was just on the Monday show. UVIX back at a 4 handle. Man, we had a 190, 180 not too long ago out there. So UVIX effectively doubling over the last couple of weeks. We'll see if it can keep this level all the way through October 11th, listeners. Then we're talking a 40 handle in UVIX when it reverse splits. Now things are getting interesting. So we shall see. Up about 0.5 point in UVIX, and good old VolQ at a 20.2, literally unched from where it was on the Monday show. So no joy in VolQ land, but intriguing stuff going around the horn. Mr. Uncle Mike, I think we shall start with you, sir, because we are looking red and we need a little dose of optimism. At least the Bulls do out there to start their day here. So what's catching your eye out there in, at least so far, a non-Uncle Mike type of day, sir?
A non-Uncle Mike type of day. Well, the bonds are not hemorrhaging, so that's a good thing on the day. If you're a bondholder, we're kind of flattening out the last couple of days, and so I think that Mark and I had talked about this on Monday's show, and that as the bonds are going down, it's like a weak bond market is dragging stocks down with it right now in a lot of ways, which is kind of unusual because a lot of times there's an inverse relationship with stocks and bonds, with flight to risk, flight to quality, and that type of thing. But with bonds coming down, I think there's just a lot of concern over continued raising interest rates to see if that's going to happen or not. But the last couple of days, bonds have been relatively stable. And so with where we are right now with the SPX, we're at in the low 4200s. 4,200 looks like it could be a pretty decent level of support in that we had highs there in May of 2022. We had highs there in February. We had highs there from essentially April through May. And then with that, if resistance becomes support from past areas, then 4,200 does not look like a bad spot to buy into if you are looking to get into the market and you're not already. So we do have that going for us in terms of the positives. Now, of course, some of the negatives, and the biggest negative that sticks out today is XLK. And now that's down a ton. It's down roughly 0.5%, but XLK is the technology sector. And it's very difficult to have a significant market rally if technology is not leading it. Now, it's possible, of course, but a lot of times what we'll need is for technology to lead the rally, and then others will fall in. Now, a couple of stocks that in looking at within the technology realm, Apple's holding its own in the low 170s, so it's not by any means falling out of bed. Microsoft is at a little over 316, so those are a couple of behemoth companies. And when looking at those, are they just hemorrhaging and going down quickly? No, they're not. They seem to be bottoming out, which it does from the standpoint of being a bull. That's what you're hoping, or what I'm hoping the market does, is it just bottoms out at some stage. And maybe the market will take my advice on the 4,200 level as well. So we'll see, because chart patterns are right, chart patterns are wrong. But one thing is for certain, the market is always right. And that is what I'm seeing today, Uncle Mark.
Well, you mentioned the weakness in the bonds. You've been on that boat with the 10-year note for a while. That boat, not going to lie, looking a little leaky right now, Uncle Mike. So where do you stand on that boat? Are you bailing out the water as we speak? Are you bailing out of the boat entirely? Where do you stand on the old 10-year note, sir?
Well, in terms of the leaks in the boat of the 10-year note, you can plug leaks with covered call premium. And so that's honestly what I've been doing as best as I can throughout the leaky boat, if you will. And so I think that by doing that, you can create more yield. And does that mean that I've gotten every tick to the downside through covered call premium? No, definitely not. But what it does do is it can enhance yield, and it can put you in a good position for taking advantage of where it is when it's at a lower level by plugging the holes, if you will, to add to Mark's description of my analogy on the 10-year note. So that's kind of where I'm at right now.
There you go. Plug in the holes with a little bit of covered call premium. That's why you want an advisor who can actually trade some options, listeners. It may come in handy once or twice. You never know. As we keep on rolling that dial back out to the east, the far northeast, where, it's a day that's red, things are dark and stormy. This is definitely a Rock Lobster type of day. Mr. Rock Lobster, sir, what's catching your eye out there in these dark and stormy markets?
Well, I mean, I don't know if anybody's missed the news of this week, but Congress doesn't have a Speaker of the House anymore. Did you know that?
Are you going to start your remarks with more political commentary? Have you learned nothing from Twitter, sir?
Yeah. Well, what I think the most important thing with that is that really didn't move the needle a whole lot from a market or vol perspective. I mean, the market hasn't really gone up much, but like the day after, I think SPX rallied a little bit. So that also sadly means probably nothing's ever going to change. And we're stuck with, let's see, we've added $10 billion of debt in the last, 7 years, something like that. 10 trillion. Sorry, I get my numbers all messed up.
I was going to say 10 billion. That's a bargain. We'll take that.
I know. I was thinking of that guy on Austin Powers, Dr. Evil, I'm going to charge you $1 million ransom. And everybody laughed. I think this kind of reminds me of like the slow walk where, if you anytime you've traded anything basically, and it just goes in one direction, and it's like kind of like the dot-com boom. And I remember, it's 2000, everybody's like, dot-com boom, they'll make money eventually. And everybody just bought stocks at crazy valuations. And it was all cool for years and years, and then it wasn't. And then all of a sudden everybody got out at once. Boom. And I'm starting to feel like it's not like we have not talked about it on this show tons of times. It's not like it's a problem that can't be fixed. It just hasn't been fixed. So, a government can't run a $1.5 trillion deficit I just looked at for fun, look at the U.S. government website. We've taken in $4 billion in revenue and we've spent 5.5 trillion. So it's like, okay, it's all there. I mean, it's all posted. Everything is nice and black and white. And I think it's just kind of coming to a point where, all right, you got this BRICS thing happening. And so the Chinese are starting to dump bonds. So I'm sure that's part of it. So all these countries that were holding U.S. debt, maybe you're starting to get rid of it. And also the reality that maybe the Fed's not coming to anybody's rescue anymore because they can't. Rescue what with what? This grand experiment of zero rates for the last 15 years since the great financial crisis has been, I can say it was just what did it get? What did it get us? Nothing. So anyway, as far as the market, as these yields, markets don't like things going in one direction forever. And of course, everybody can get used to stocks going in one direction forever, but eventually we even know that gets overcooked, right? And things come back. And right now, rates are going to wind up. They're going to keep winding up, I think, slowly but surely, until there is a reason for them not to keep winding up. And they might go up a little farther afterward, for the simple reason that, I think Powell's trying to do whatever he can do by raising rates, but the right hand's not quite talking to the left hand as far as the executive branch in Congress. So however long this little game plays out, and then stocks, I think, are just kind of stuck in the middle. So yeah, I think stocks are very much following rates. As rates go higher, stocks are going to go lower. And it feels like when you look at a lot of stocks this year, I mean, the S&P 500 is green for the year, mostly on just a few stocks. And if you look at a lot of just regular names, like what I would call brick and mortar, Main Street type names, they're shellacked, having a terrible year. So And I also think quality companies are getting sold as well to just like raise dough. I think people were selling stuff that were up, and they're trying to keep their powder dry. They're not quite happy with how things are going. So I don't know when interest rates stop going up, or when bond yields stop going up. Would it surprise me to start seeing these rates hit a surprise level? And everybody's like, oh, they're 6%. Oh, they're 7%. Who knows, right? There's no real governor to stop rates going up. So I think, and then again, the equity market is stuck in that. And generally, when there's uncertainty, equities go down, and when there's certainty, equities go up. So I think we're kind of in that spot right now. And 4,200, I think, looks like a decent level, but it'll take all of 3 seconds for us to blow through that if people start to actually worry about Uncle Sam's ability to pay debt back. So as of right now, that's not a total worry, but I'm going to start saying it's creeping in. The camel is sticking its nose under the tent just a little bit on this right now. There you go.
So that's interesting because you've been surprisingly bullish of late. So you've been coming out here and kind of bucking the trend and talking up your bullish views. Now you're saying it's starting to be a little reminiscent to the end of the .com days, sir? Is that what you're putting down here?
I'm starting to say like the fact that things can just keep going in one direction. And they're, as far as like the .com, everything was looking pretty good, like the AI thing, and it was pulling stocks up and everybody was getting giddy. And now all of a sudden the rate thing, the fact that it just keep going in one direction is making everybody forget about anything, what I would say like the basic economy stuff. Because I think the jobs numbers are still pretty good. All that kind of stuff is still good, which generally it was hard to go into recession when unemployment's 3%, or we generally haven't in the past. So the fact that the rates kept going in one direction, I think, has kind of upended the apple cart a little bit. So you can always change your tune when something changes. And the rates going up, at least short term, is definitely putting a kick in equity prices.
That it does indeed. Reference our conversation earlier about the leaky boat for the 10-year note. As we go around the horn, we dial all the way back clockwise, back to CBOE East there, where we are joined once again by the FLOWMASTER. Mr. FLOWMASTER, sir, what's catching your eye in yet another topsy-turvy day and week for the markets?
Well, I have to agree with Andrew. The mood has changed a little bit. I mean, my mood has. Things are a little rougher out there. And
did he make you grumpier? Did he spread his pessimism to you, sir? He has a way of doing that.
Well, what's funny is I went to that Global Volatility Summit where there's a lot of tail hedgers, and they have all sorts of scary stories, right? Like that, it's the end of the world because that's how they make their money, is getting people to buy some tails. And then, so I was bearish for like a few weeks after that, and then I got over it. And but market's gotten a little bit rocky, and you're right, VIX around 19, and S&P is still up on the year, about 11%, but we were higher. So, and there are plenty of stocks that really have gotten beaten up. So I am a little bit nervous. The Washington stuff, those shenanigans, that makes me a little nervous too. I'm just nervous, I guess, overall. There's still pockets, and I do, the one thing that, the way this year's been going is things really can turn on a dime. So, obviously rates are higher, but, we kind of pivot between, well, they're about as high as they're going to go. So, they're going to start to come down sooner or maybe later, but it's kind of like there's more likelihood that we're going to see lower rates. And then, then you lose that sentiment for a while when we get employment numbers that surprise people and are very, very strong. So, I still think that equities are kind of where most people keep most of their money. But you do have a situation now, right, where, people that I talk to that trade, they still like equities, but when you see 5.5%, 6% on a fixed income, investment, it definitely pulls some money out of equities. So it's just, it's a competitive asset. So, that's what I've been watching, putting some work into some new products, which I will mention in a bit.
All right. We will keep our ears open for those as we keep on rolling, listeners. What is all this tumult and indeed maybe the worm turning for some of the sentiment, as the FLOWMASTER put it, his unease boiling over in the marketplace. How does all this translate into paper out there? Let's see what we're seeing out there. Is it another sleepy day for macro and a booming day for micro? I haven't seen that in a while. It's kind of been the other way for lately. It's been booming days for macro and not so much on the micro side. Is it still that way again? I guess only one way to find out, listeners. Let's fire up the old FLOWMASTER machine and see what we got cooking out here in these markets. Let's start in VIX land, as we are wont to do, listeners. And we know one thing. We know that VIX likes a little tumult. They like a little bit of red on the screen. They like a little bit of whipsaw action intraday. We're getting all those things right now. So VIX is responding in kind. 717,000 contracts on the tape. So we've already blown through our ADV from a week or two ago when we were back well below 700K. In fact, that ADV looking robust again. 808,000 contracts on the tape out there right now, listeners. So intriguing stuff. Let's go keep rolling out here to SPY. 4.8 million contracts on the tape. The ADV almost 8.42 million. So SPY looking very robust out there right now. The S, 1.7 million. So again, that's actually almost sleepy for the S right now. We kind of expect 1.75 million on a given day this time of day now. That shows you, again, I hate to beat a dead horse, but shows you how much the outlook and the use case for the S has changed in just a year. A year ago, 1.75 million. Oh my God, the sky is falling. What's going on? Now it's like, oh, it's only 1.7 million. We're not even at 1.75. That's a light volume for the S. The ADV over 3 million now. 3.07 million contracts a day going up in the S. And you know the deal. Good chunk of that expiring same day, listeners. Small caps also looking robust. 486,000 contracts on the tape for our old friend IWM. The ADV now well north of a million again. 1.1 million had drifted down to 800, 700 something thousand a day. Now, bam, right back up to well north of a million. That's probably because small caps selling off again today, off about almost 0.5%, about 0.45% right now. So it seems like they might be on pace to hit that 1 million. We'll see. A little light, but we'll see. And then the Qs, once again, day that ends in Y, Qs putting up some numbers. 2.7 million contracts on the tape. The ADV, about 3.7 million. So only got about a million more to go, which we all know is kind of a rounding error out there in the Qs. Now, the question I know a lot of you have on the top of your mind right now, listeners. What's going on the micro side, on the single name side, listeners? If you're playing around with the old FLOWMASTER tools, you can hit that most active button out there. You could follow along with us exactly here on the show. And if you do that, you filter out to the top 10, you would see that once again, it's a day where everyone's so obsessed with what the Rock Lobster and the FLOWMASTER were putting down earlier about this unease out there in the macro side. Doesn't seem like they have a lot of time for the single names, because once again, we're looking at numbers that are kind of like the dog days of summer here. 155,000 contracts is all that it cost you to break into the top 10 today. It's hard to get much lower than that. I don't think I've ever really seen it much lower than that now that I think about it, listeners. I mean, that's a pretty low bar, and that gets us to our old friend Alphabet, which again is why we used to joke about when Alphabet's in the top 10, you know it's a sleepy day. Now, of course, we've added this whole AI component that seems to be jazzing things up for a lot of people out there. Makes maybe Alphabet Class A a little bit sexier, but today, not so sexy. Only 155,000 contracts on the tape. Alphabet off about a dime right now. Again, kind of doing that whipsaw dance intraday, almost exactly a $2 range, a low of 133.45 on the dark side, 155.49 on the upside there. So $2 range almost exactly, and only 155,000 contracts on the tape for good old Alphabet Class A. Then we go to number 9, name we haven't talked about in a week or two, but it's back. It's the reigning king of the apes. It's AMC, 8.25, off about 6 cents. So again, whipsaw action, a range of about 60 cents on the day. We're hanging out right at the low end of that range right now. And again, good for 184,000 contracts. And the number 9 spot. Number 8, another name we haven't talked about in a while, Bank of America. 25.80 right now, off about 12 cents. They've had a range of only about 30-odd cents today, so not a banger day for them, but enough to sneak in. Again, that shows you what a sleepy day we have. Number 8, 191,000. Good old Bank of America sneaking its way into the top 10 today. Number 7, now we're looking at some of our usual suspects here. It's the artist formerly known as Facebook. Meta, 231,000 contracts on the tape today. Giving up a little bit today. 303 roughly is where it's hanging out right now. Off about 2 2/3 on the day, or almost a full percent. It's like it's had a range of about $5 and change on the day. So intriguing, hanging out right kind of in the middle of that range right now. And again, good for number 7, 231,000 contracts. Number 6, the Amazonians coming a little early today. 321,000 contracts on the tape for them. Amazon, 125.5, off about $1.50. Looks like they've had about a $2.40 range today, and they're about $1.20 off their lows right now. So hanging out close to the middle of their range as well. And again, good for number 6, 321. Number 5, keeping it in the A tech names out there. We go to AMD. Again, we're at number 5, halfway in, listeners. Only 324,000 contracts on the tape. A day that single name options traders seem to have forgotten, listeners. It's AMD, 102 1/3, off about $1.75. Let's see, the range today, about $3.50, and they're actually about $1.50 off their high right now. So kind of mid-market for them as well. And again, 324,000. If you want more tech names that start with A, how about that? Then let's keep it rolling with Apple, listeners. Again, number 4, Apple. Shows you what a weird day it is. 417,000 contracts. Apple trading 174 even right now, just ticked up about 1/3. So managing to buck the trend. They got it down as low as 172 and about 1/2 today, and the high was 174 almost in 1/2. So nearly a $2 range on the day. Looking at towards the upper end of its range for Apple. So kind of bucking the trend out there. 417,000 contracts, and good for number 4. Number 3. This was a frequent offender back in August. We were talking about all that Rivian call upside. Yeah, it's Rivian. 493,000. Again, we're sub 500,000, and we're at number 3, listeners. Sleepy day. 1897, where Rivian is hanging out. Man, they're coming for it today. Off nearly $5, about 4 3/4, or about 20%. So the news out there, obviously, no bueno on the Rivian front. They're calling it a double disappointment. The Rivian announcement. They said they plan to raise $1.5 billion as well, but I guess that's not sitting well with the market either. We were just talking about people loading up. I think, was it the 25 or maybe even 30 calls in August? Now we're at 1897, listeners. So the worm has turned, at least for right now, out there in Rivian. Let's see if AI can buck the trend. Number 2, NVIDIA, 571,000. Yeah, AI can. Nothing can stop the AI train, listeners. 445.13 is where NVIDIA is hanging out right now, up about 4 3/4 or about 1% today. And again, good for 571,000. And then we take just a huge leap. It really takes a lot to get Tesla below 1.3 million. I mean, it's just like the wind kicks up. You have see a little sunshine in the morning, bam, 1.3 million contracts on the tape for Tesla. It's just like clockwork. 1.38 million right now for Tesla. So over 2x, closing in on 3x of our number 2 contender here, NVIDIA. Again, you folks just can't get enough of Tesla. What are you trading out there in Tesla? I'm curious. Hit us up. Let us know. Tesla, 259 1/4, off about $2 or about 0.75%. And again, good for the number 1 spot out there today. Since we're talking numbers, let's wrap up with this before we get into some of the FLOWMASTER's analysis this week. It's that time, listeners. We just gave away the September Pro Trading Crate. That also means we're getting the numbers in our hands from our friends over there at OCC for the month of September. I think we were all surprised with how robust August was. August, not usually a banger season. Usually the dog days of summer and the late holiday period in December, 2 seasonally light moments and light periods in the market, both from a volume and a volatility perspective. We saw August kind of buck that trend. Can we keep it going through September? And the answer was not really. It was still, don't get me wrong, decent paper across the board, but we're not threatening 1 billion contracts out there. Total volume in September, 847.8 million contracts. And the ADV, 44.4 million contracts. So if you look at it compared to September of a year ago, equity options were down 7.5%. ETF options down 10.4%. The lone bright spot, I think you can guess what it was, listeners, index options ticking up 9.3% year over year. Of course, directly translatable to that 0-day flow out there. Overall, options volume down about 7.4%. From September of last year. Futures also taking a hit, down about 5.3%. So a bit of a respite out there. I think everyone maybe just taken aback by the robust nature of all things August that we saw out there. Fascinating stuff. Not a lot going on the earnings front outside of that. I just talked about Rivian. They're kind of one of the more intriguing names popping off this week. Outside of that, we had Tilray earlier this week. People were all fired up about cannabis. I think they disappointed some folks out there. We saw McCormick. People were saying that all the puns are out there this week. A spicy report from McCormick's. So maybe a little bit of fun to be had in the spice sector out there. We have Conagra and Levi's today. Of course, you know where to go if you want that data for yourselves, listeners. TheOptionsInsider.com is the place to go. Click on the Options News and Articles tab to begin your journey to the dark side. Right now, the season hanging out at about 99%, so that's pretty much exactly in line with our long-term average of 98%. So it continues to tick down a little bit out there, which is interesting. If you're concerned or interested by all things Levi's after the bell today, they were at 13.5 when we ran this report this morning. They were pricing in $1.04. In the past, they moved 78 cents. So a decent amount of extra juice, certainly percentage-wise, when you're looking at Levi's. What's cooking? What's up with the jeans, Val? I guess we'll have to find out after the bell. And speaking of finding things out, let's find out what's on the FLOWMASTER's brain, listeners. It's time for a little bit of the old Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody, let's get weird, let's get wild. Let's unleash the eye of the FLOWMASTER on these markets. But before we do that really quickly, Mr. FLOWMASTER, I just read down the numbers from our friends over there at OCC for the month of September. Robust, decent, but not blowing the doors off. Any surprises or things of note out there for the monthly volume for you, sir?
It's interesting. I was actually topping off a state of the industry through the end of the quarter, and I saw that as well. My annual estimate, right, which is just basically where we are in the year and how many days are left to go, reverted from 11.4 billion contracts annual down to about 11.2. So September was a little bit lighter. Maybe people were on vacation or something. The index volume was super duper strong. I think SPX by itself, the average daily volume in SEP was over 3 million contracts. So, and in fact, for this month, even though we're only 5 days into it, the average is running like 3.4 million contracts. So, a little bit of a shift. I think that people are not so focused on the single stock world and the ETF world. Taking a break maybe. You also remember you're going into like the fourth quarter, market's up pretty strong. Even though we have all sorts of angst. And when you get there, especially in the institutional money managers, they start to kind of, circle the wagons a little bit, right? They might bite off a few hedges. Up 11%, if you're tracking the index, that's a pretty decent year for an equity manager. And they just want to make sure they don't have a rough fall, especially because, October can sometimes be a very rocky month. So no big surprises there. There's, just the kind of the trends that we've seen continue to roll along. The short-term zero-day trading is still the hottest topic for every visit that I have with people. But there's also, there's a lot going on. There's new products. There's a lot of new approaches into the market. So very, very healthy, very robust.
Getting to the point where it's going to be all SPX all the time and zero day and everyone else take a break. That's where we're headed, Mr. FLOWMASTER. If these trends continue. Speaking of continuing, let's get on out to the oddness of today. Let's see what the FLOWMASTER spotted for us. First, let's go out. This is the name. I'm trying to think if we talked about them before on the network. If we have, it's been some time because I cannot recall it. This is Monster Beverage Corp. Ticker symbol MNST. You know them. They make those, shall we say, interestingly flavored energy drinks out there. One of the OGs in the energy drink space, alongside, of course, Red Bull and some others out there who use all, the taurine and all that kind of stuff that has, shall we say, a flavor I'm not a huge fan of. But right now, it's like the market not a huge fan of this stock. 50 3/4 off about $1.50 or a little over 3% today. So they are coming for a little bit of monster on the year. Let's see. A year ago, they were trading about $46. So they're up about $4.60 or a little, almost exactly 10% actually on the year. The low was 42.80, came shortly thereafter in October. Then they rallied it for the highs of the year. That came in May of around about $60.50. So they're about almost exactly $10 below their high right now. They kind of vacillated around that level for quite a while. They were still trading around $60 towards the end of August. Then they started coming for it. The last month and change, not exactly been great for Monster. They're off about a little over 10% on that frame. So rough time. And Mr. FLOWMASTER, First off, I like it when you get punny saying you saw some monster call buyers out there in Monster yesterday. So I had a nice chuckle at that. What caught your eye out there yesterday, sir?
So, yeah, I did not catch this one in real time, unfortunately, but the call volume in Monster was 8 times normal yesterday. And the reason I noticed it is we've talked about this trade of the day email that we send out, which I'm still working on getting into some sort of command. So the folks want that. When can they get that? I know. We're working on it. It's always third place on my list of things to do.
They keep sending me the hate mail. I'm like, no, send it to the FLOWMASTER. It's not my gig.
Maybe you know what, Mark? Maybe I'll figure out a way to send it to you. You can brand it, and then it can be the
there we
the
go. Options Insider
trade of the day.
Yeah, all right. You can
make
that happen.
Bad idea, actually. But here's the thing. So call volume was it was almost all call volume, right? 14,000 calls yesterday versus 1,700 puts. And, as I said, a couple of these trades, 2 of them topped our trade of the day, being the most profitable opening sweeps. And so I dug into it, and basically at around 12:20 or so, kind of in the afternoon, we saw a buyer of 1,800 of the OCT 52.5 calls for 55 cents when the stock was around 51.20. And then a little bit later, another 1,700 of those same calls for 60 cents. 3,000 traded later for 80 cents as a floor trade, and it did net open. The positions were net opening. So it's funny. I met with a pretty big shot trader yesterday in Midtown. And we were talking about liquidity, and in fact, we were talking about listed trades versus OTC. And he said something like, in the listed world, you can buy 3,000 or 4,000 calls, and there's great liquidity, and the stock doesn't move. He said, but if you go and buy 6,000, 7,000, 8,000, the stock can take off. And the way the conversation was kind of like about why people trade OTC sometimes. And he basically said, if you're trying to buy calls without spooking the stock, and you have a big position to put on, that was kind of the rationale for buying OTC. And in this case, it kind of seems to echo what he was talking about, which is, the first couple thousand, stock didn't really do very much, but the last few thousand, it did. So, so that stock, finished at 52, where did it go out? 52.33. And these calls basically doubled from around 55 cents to almost $1. So then these were $90,000 slugs of premium. So made a couple $100,000. It looks like, I would imagine it was one trader or maybe a couple of traders who were kind of on the same page in terms of what they wanted to do. But it's an interesting one. Now, the funniest thing of all, though, is that the stock is definitely did not hold up. It's down around 50.88 today. It's down almost 3%, $1.50. And it looks like they puked some of these out. About 6,000 of those same contracts were sold today for 46 cents. So now they certainly could have done okay, kind of trading the gamma. But looks like this one might have been a quick flash in the pan.
A bit of an ouchie there. Yeah, we always assume that if they were savvy, they could trade the gamma. I usually find that's not the case. But hey, you could be optimistic and assume that. Mr. Rock Lobster, did you notice this explosion, as the FLOWMASTER put it, these monster call buyers in Monster? And looks like they passed your first test. They made money the first day, but then they didn't get the heck out of Dodge, and now they're wearing it today, sir. What say you?
Oh, so the guy, I shouldn't say guy. So the trader made $100,000 and then it all went away. Is that what you're telling me?
Seems to be the case, sir.
That's a sad tale right there. If that is truly the case, well, now I got to pull up Monster here. All right, and I lost live vol and all my screens went down, and oh my gosh, now everything's a mess. Raining cats and dogs and all that kind of stuff. So hold on here. MNST. Yeah, 52. Oh, geez. And you're saying they did not get out at all on these? That's beyond terrible.
They bailed, but for prices below what they bought them for.
Oh. Oh, okay. I see all the opening prices, and now the stock's trading 50.76. So, I mean, I guess just in this case, they live by the sword. I mean, because now they're trading 40-45. So yeah, if you're saying they're exiting today, I mean, I don't. Again, I think it's odd when they make kind of like the home runs. They don't take the money. It's kind of odd.
Hence the name of the segment, listeners, the Odd Block. Mr. Flowmaster, anything up your sleeve, or should I keep on rolling with some of the ones we saw today?
No, you can move on. That was kind of that's the most.
That was your monster. That was your monster call by. That was a good one.
I mean, it is a monster call by. I mean,
he liked it.
You think about it, 25-80, and they're green on them, and then they're like, no.
That's not enough for me. We
don't want that money.
I won't take those dollars. I'll let them sit out there. I think you just like the pun. You say I like a good ticker. I think the Flowmaster is a sucker for a good pun. Hence his inclusion of that one in the.
You know what? Those New Yorkers are quite witty. I've noticed.
They're a very punny bunch out there, listeners. Let's see if we can keep up. Let's go on out here let's talk about another name we haven't talked about in forever. In this case, this would be Weyerhaeuser Co. Ticker symbol WY. This is a timberland company. They own nearly 12.5 million acres of timberlands in the U.S. So when we talk about lumber all the time on TWIFO, dead trees, one of the most volatile assets on the planet for the last 3+ years, last couple of months notwithstanding, we're talking about names like Weyerhaeuser here, trading exactly $30, just ticked, listeners, up about a dime today. So kind of a quiet day for them. On the year, I'm guessing if past his prologue, it's been a pretty topsy-turvy name given what's been going on with lumber prices. And the answer is yeah, a year ago was $29.81. So on the year, they're actually net kind of unched, which is funny, even though they did rally it all the way up to, let's see, about $36 even exactly. That came on February 2nd. So the lumber name topping out kind of with the rest of the market, the tech names and everything else. That's kind of interesting. You don't usually think timberlands and AI topping out around the same time, but that's kind of what we saw. And then they came for it. They crushed it down to $27.65. That was in May. And then they rallied it again right back up. So speaking to that volatile nature of dead trees, 34 1/3, actually about 34 1/2. That was on July 18th. And then they've since come for it again, back down to about $30 exactly where we are right now. So net almost literally unched on the year, but they've done quite a bit of living in between out there. Let's see what our Eye of Sauron found out there. What are they wagering on in dead trees right now, listeners? Looks like we got a little bit of the old upside call love going on out here again. We got 4,000 of the October 31, so pretty much exactly $1 out of the money calls, going up for a quarter, lifting the offer. The stock was exactly here, $30 when these went up, so no movement on the stock. If you're wondering what is the vol in dead trees, it's about a 24 1/2 almost out there. So decently volatile, but you're not talking biotech or crazy meme stock vol either. Let's see, earnings are on the 26th, so they're not getting any earnings juice in this either. This is just a straight up swing for the old upside fences in Mr. Flowmaster, your new favorite name, Weyerhaeuser and Company, sir. What do you think?
I'm always good for some paper products.
You've been sitting on that one for a bit too, haven't you?
No major comments on that. It's interesting stuff. As I said, I think that there's opportunity out there, and people are continuing to trade even when we stress about the macro conditions.
Yeah, I'm always fascinated by everyone's talking, obviously AI now, but before that it was meme stocks and everything else, pick your poison energy. But yet, if you go look at dead trees in terms of volatility post-pandemic, I think dead trees might trump them all at the end of the day. Last couple of months notwithstanding, been a little bit quiet out there. Mr. Rock Lobster, anything to add here on the dead tree front before we keep on rolling, sir? I'll take it from your silence. It's a resounding
moment of silence for the trees.
As I live in Maine, and my hemlocks are blighted with this woolly algidid or something. It's a bacteria that kills them.
Oh, there we go. That's why it's going on.
It's very sad. So that was my moment of silence for the trees. Thanks, Henry, for pointing that out. I appreciate it. I'll just say this Weyerhaeuser chart looks like so many commodity or charts, fertilizer, you name it, since the beginning of August. Straight down. So I can see why somebody would want to buy these calls. Although I think the duration is a little tight considering, as Henry so nicely put it, the funky macro conditions or the macro conditions that everybody's kind of got in the back of their head right now. But I mean, it's only $1 out of the money, but it is a kind of a nasty 2 weeks to buy calls, I think. But it could happen. Hey, anything could happen.
Anything could happen in the land of dead trees. And rather than doing a third one here, Mr. Flowmaster, I did have a question for you because I saw some interesting nuggets coming out of CBOE land this week. You guys you're back on the cusp of throwing a whole bunch of stuff against the whiteboard to see what sticks. And usually there's a lot of cool theoretical stuff in there, including an intriguing thing that we've talked about a few times on vol views. One of the popular things on the institutional side for vol traders is the dispersion. Of course, trading the vol of the index against its individual components. Seems like the product crew over there at CBOE hitting on this hot new trend that's cool with all the kids right now, dispersion. And also what caught my eye is not just putting out there an abstract index, which of course it is for now, but it does sound like the plans are for this to become actually a tradable product, which is the question we get whenever there's a CBOE announcement of an index. Can we trade it? The answer is inevitably no, but it sounds like for this one, Mr. Flowmaster, the answer may eventually be yes, sir. So what do you know about this new dispersion index that all the kids are hyped about?
Right. So CBOE announced the DSPX, which is the CBOE S&P 500 dispersion index, and dispersion trading. You're right. It's definitely more kind of advanced topic, but the timing is right because dispersion trading has been very popular over the last couple of years and very profitable too. So CBOE Risk Management Conference is in 2 weeks. Actually, I think I'm going to see Mark Sebastian down there, and dispersion's always kind of a big talk there because there's an index side of it. Basically, it's index trading versus the volatility. Index vol trading versus the single stock component vol trading. And there are a bunch of different ways to do it, but the CBOE DSPX index is it's a nice, straightforward, kind of standardized way to do it. They do expect to have futures listed on this thing within I think about 6 months. Don't hold me to that, but it's this one I do think it's going to work because they have a lot of institutional interest, a lot of kind of the CBOE partners, the banks, the firms. They already trade this. It's just kind of a matter of getting people to kind of coalesce on one way to do it. But and at the simplest level, I'm working actually on some analytics to complement what Mandy Zhu has done here. Because she has a couple nice papers about it. Actually, there's a landing page, cbo.com/DSPX, and there's some good information there. But basically, VIX can be at 20, and you can have stocks all trading together. High correlation, right, which is low dispersion. Or VIX can be at 20, and you can have kind of a stock picker's world where some stocks are doing really well and other stocks are getting beat up. And, that's what we were kind of talking about at the very beginning, right? You look at some of these stocks out there, I'm thinking Disney, Telephone. I saw a couple other, real kind of blue chip stocks that were very beat up today, versus, some of the names that are up, things like NVIDIA. I think the interesting thing about the DSPX dispersion index is just kind of trying to get comfortable with these kind of different regimes. There's times where everything's trading macro factors are driving things, and I think we have some of that now, especially with rates, and in some of the macro fears. But then you also have kind of a lot of kind of alpha in the stock picking world, and that's what this index is for. So I'm pretty excited about this, and it came out pretty quick after the VIX 1 day, which is also a really interesting and useful measure. That one I'm not too sure if there's going to be anything tradable on it, just because there's some real challenges with settlement when it's super duper short days like that. But this one, DSPX, is worth digging into for the listeners that really like to kind of think in the kind of the advanced applications of derivatives. And cross asset trading is one of the big trends we're seeing as the markets get more accessible, especially electronically. So this it all kind of plays into it at the same time.
That it does. Listeners, check it out. CBOE Dispersion Index. You've probably seen releases about it or seen tweets about it. It is interesting stuff if you want to see what the big boys are up to and vol quite a bit. This may be an interesting way to do that. And the hope is that it's going to be tradable. So that answers the question all of you always ask, can I trade this? Maybe someday soon. The answer for this one is yes, as we keep on rolling into our final segment and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everyone. Welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on for the rest of the week into the old weekend. Does seem like we have a little bit of a bounce cooking right now here in the old markets. We're hanging out right around 42.5 right now in the S&P, so only off about 0.25%. So a little bit of a rebound cooking out there. Will this continue? Has the worm turned, or is this yet another head fake before we start turning back down? Let's go back out now to the Unklest of Mikes. First off, Mr. Uncle Mike, are you feeling this little bit of a recovery we got out here? Is this the worm turning? And then what are you keeping an eye on for the rest of the week? And then, well, we'll get to the plugs in a little bit. What are you keeping an eye on for the rest of the week?
Hold on a second. Yeah, buy another 6,000 lots of it. Yeah.
There.
Okay.
There's
anyway.
The Uncle Mike we all know and love, sir. Yes. Straight.
That was not true. I just made that up, but still. Yeah, it's the option block effect on the market. All the positive talk that we do. Who wouldn't want to buy this market with the vast audience that we have? But yeah, in terms of around the block and what I'm watching, it's like I was talking about earlier in the show, the 4,200 mark. I think there's a lot of reason to believe that could be a source of support. And markets doing what they do, they don't always act like you think they're going to do. Maybe we're at support right here. Who knows? But I'm definitely watching that number to see if it holds, if we do test it. And then, of course, watching the bonds like we talked about as well, seeing where they are going to go. If the 10-year note with the leaks in the boat needs to plug some more leaks. So that's kind of what I'm watching.
Mr. Rock Lobster, same question for you, sir. What are you keeping an eye on until the show next week?
Yeah, this 4,200 level is interesting. And also, I'll do the same thing. I'll just keep buying a little stock here and just assuming that the U.S. will write whatever odd course it might be on currently. But yeah, I'm still looking at this interest rate thing and how, can we scare some kind of number that nobody imagines? And as of right now, I still think that's I'm not going to say it's 50-50, but it still feels like it's a lot higher than everybody gives it credit for. So I think everything is the interest rate until it's not anymore.
And Mr. FLOWMASTER, sir, last but not least, what are you keeping an eye on until your next appearance next week?
I just took a look at Levi's into earnings. That's expected to move around 7% tonight, which is average. And then, the earnings season will heat up, but I'm actually trying to get some data put together for Risk Management Conference. And I think I've got a couple other presentations to do. So I'm just going to be busy making really cool things. But I have a very cool looking into the future slide from my deck, which I will send over to you.
All right. We'll look forward to that, listeners. Unfortunately, that music means we can't look forward to any more show, at least for this program. If you're one of our pro folks hanging out, you want a little bit more show in your lives, don't worry. Coming back in a little bit with This Week in Futures Options to break down all the action. Are dead trees lighting it up again this week? I got a feeling energy's probably lighting it up again this week. What else is lighting it up? Is it equities? Is it Uncle Mike's leaky boat with the 10-year note? I guess we'll find out in a little bit on TWIFO. All you pro folks hang out. Everybody else, check it out when it hits the on-demand side of the network. And let's go around the horn, see what's cooking with everybody else out there, where you can go to find more. Uncle Mike, if they want to join you on that leaky boat, where should they go? What should they do?
Hey, we plugged our leaks, baby. Check me out on Twitter at Mike TOSAW, TOSAW, or check out my website, stcharleswealth.com. If you want an advisor who actually tries to plug leaks when things don't go your way.
There you go, stcharleswealth.com, the place to go. And Mr. Rock Lobster, where should they go if they want some of your, shall we say, curmudgeonly view on the markets?
It's not always curmudgeonly. Right now, maybe it's a little dour right now. optionpit.com, and you get 10% off anything if you say you heard it on this here show. So who says you can't get something for nothing? And yeah, I think Mark will be at the risk management. I think it's in Austin, of all places. So
yes, it is.
And of course, I will not be there because I see no reason to go there. So there you go.
I will not be there either. Maybe Mr. Meatball can be our man on the street. Maybe Mr. Flowmaster, you'll be in Austin. Maybe you can be our man on the street there as well. I think Dr. Vix will be there, so we'll have a lot of perhaps on-site correspondence. Mr. Flowmaster, what do you say? You want to be our man on the ground, boots on the ground in Austin, sir?
Sure, I will. Just tell me what you need me to do. I'll do it. And yeah, I think we're going to take the whole conference over to Mark's house. Maybe for
there we go. Hang out in his backyard with his little boys there. Should be fun.
I want to see his lizard. He says he has an axolotl or something.
That I cannot speak to, sir. In the meantime, sir, if folks want to check out all these cool goodies you're cooking up for CBOE, or maybe learn more about the dispersion index, where should they go? What should they do?
CBOE.com/RMA for all of the data and terminals that we have, and CBOE.com/DSPX to figure out more about the DSPX index. And like I said, I'm actually working on some plots of how DSPX lines up with VIX and SKU and some of the other things kind of from what we're used to looking at. So it's pretty cool.
Pretty cool. You know where to go to check it all out. CBOE.com, the place to go. We got to get on out of here. Back again in a little bit for TWIFO listeners, then back again tomorrow. I'm sure you got questions about this crazy vol that's going on. We all do out there. We'll answer them tomorrow on Volatility Views. Should be a fun one. Will our vol prognostications hold up? Only one way to find out. Can I get 2 bullseyes in a row, listeners? Only one way to find out. Can the Rock Lobster ever get a bullseye? Only one way to find out. Vol Views tomorrow, noon Central, 1 p.m. Eastern. And then, of course, after that, we get weird, we get wild. We talk about our beloved Oatly and everything else over there on Options Oddities. Only one place to go to get that, theoptionsinsider.com/pro. Then, of course, we're back again next week. Another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.